Hey guys, Aaron here with Carnivore Trade. So I'm going to do a special video here today um, on a topic that doesn't get talked about a lot. A lot of videos on trading talk about education, chart patterns, psychology, and I do that a lot on the channel as well. But I want to talk about stopping out and how to handle that as a trader. So it's very important. It doesn't get talked about a lot. In fact, I don't really even talk about it all that much, but I did want to bring that up here. As you may have guessed here today, if you follow the channel here, it is Friday, September 6th, 2024. So this video will be out a day or so later. But yeah, so we took a stop out today, really in both services. So, one of the things I said to my traders here is that, you're not obviously going to win on every trade, right? So don't ever think that. That's like the first thing. And obviously, position sizing is key, right? Especially if you're swinging, your position sizing to be different than if it's a day trade or if you're scalping. Scalping typically you're just looking for, say, 10 points on ES. So you can use a larger position if you're swinging something. Typically, you want to size that down pretty heavily because you're looking for a bigger move. But I want to talk about here, I'll kind of review the trade a little bit, and then we'll talk about just how I handle it. And one of the things I get from my members and subscribers a lot is, Aaron, how are you so calm all the time when, this is how we just had a bloodbath today. Spider's down, 1.75, Q's down 2.68, Russell down 2%, Diamond held up the best, still down 1% though, but big bloodbath. I mean, look at the semis down 4%. They were down 7.5 on Tuesday. It's a short week here, but why am I always never panicking? We'll talk about that, but we'll just talk about the trade a little bit here. So we had some futures, some ETFs, it's futures in the day trading room, and we had a few like long ETFs and just other things in the swing service. And obviously, so we had the big run up here, and my thesis, as I've been kind of like going over on the channel here, was I think we're going to hit 5,700, maybe a little bit of a pierce based on this consolidation. And a lot of the time, when you get to a double top too, I mean, like I'm not unaware of a double top here, but when you get to a double top or any resistance area and you start to consolidate in a bull flag, a tight bull flag, right? Even go back to last year, tight bull flag, a little dip, and then a up move, tight bull flag, right? Even earlier, sloppy, but bull flag, bull flag, bull flag, right? Tony usually wants to try and go through it. And a lot of the time, traders will try to short right at the double top, not realizing that, okay, we just bull flagged for 2 weeks, so now we have energy. So we're probably going to overshoot that, maybe 57.50, 25.50. And at that point, I was kind of looking for, I'm not going to say necessarily a decline, but just the market to digest, this big move, and then perhaps, seasonal stuff into late September. I talked about September OPEX being a time where the market would kind of hold up into, so I was thinking 57, 57.25, maybe 50 on an overshoot, then kind of just like neutral-ish into September OPEX. After that, you can get some risk coming in, not necessarily like massive risk, we don't know yet, but that was kind of the theme. Obviously, that did not happen. Trust me, I was not fooled by the end of month markup. I know what that is. I called it out in the trading room and said, look, guys, they'll probably, if we hold up into the end of the day, we'll probably get a big bid into the close. So I'm aware that this was end of month markup, but that doesn't mean we can't just be up on Tuesday and just go test that level, right? So there was no real invalidation, right? We still closed where we closed, right? We closed at a 2-week high. We closed 0.5% from an all-time high, right? So there was no sell signal at any sort of point there. So there's no reason to move out of any of those trades. Tuesday, outside move down, right? Technically, we closed below that bull inside bar. If this low was this low, meaning like this was the gap, I would have just stopped out and probably just gone short, honestly. Normally don't chase short after something like that, a breakdown trade, but in the case of a failed inside bar, I will do that. In fact, one of my best trades ever was calling the top in 2021. As soon as this was my leading indicator, as soon as the semis closed below that green bar, it doesn't look like much. 154.54 is the low, and the close is 154.40. Yes, that 4 cents matters. As soon as that gave me that sell signal, I knew the spiders were next. I believe the Qs also did it. Yep, the Qs did it that same day, last day of the year. And then the spiders did it third day of the year. And so we were short right here. And it working out pretty well. So normally I would have just flipped, just flipped right there, or at least de-risked and gone from there. But we had that breakup bar. So I said, pattern's not really broken. Trend is up. You're going into the 50 MA, the 20 MA. We should get a bounce here. And again, there could just be a liquidity grab. I've seen that plenty of times. There's just not enough gas to get to the level, so they got to wipe some people out and then punch it up. And then yesterday we closed on cash S&P. Cash S&P is a little bit different, but the spider closed above the breakup bar and the 50 MA. Cash S&P closed above the breakup bar by 3 points. Closed below the 50 MA, but it got one out of two, and the spiders got one. So they defended it into the close, right? So my thought was jobs, terrible Tuesday, terrible Wednesday, terrible Thursday. And despite being terrible Thursday, the Q, and by terrible, I mean a 35% miss. I mean, it was 144 expected. It came in at 99,000. So that's 2/3 of what it was supposed to be. Despite that, the Q's closed green. Right, so that could indicate news failure, seller exhaustion, could indicate that the news is a bad jobs report Friday is priced in. So I said, well, they could still, they defended it, right? So we could dip down in the open or dip down pre-market and then ramp. And that's exactly what happened, right, this morning. We had that news failure, and then it just got rolled, right? So what I do, I moved out, right? So we didn't get a rebound at the end of the day. We didn't get a V shape. We didn't get a squeeze. So we just move out. And I'm totally fine with that. I don't care. I mean, there's lots of evidence right now that I have that I can point to that we'll probably put in some type of tradable low, maybe even like Monday or Tuesday. We could get a margin call Monday, turnaround Tuesday. We got CPI Wednesday. That's a catalyst, right, for some short covering. Market's not as concerned with inflation right now, but it's still something, right? It could be an excuse for the market to do what it needs to do. But at this point, I just move out. Why? Well, I told you guys all week, this was my thesis here. As long as we're above, I said this probably 4 or 5 times, as long as we're above 55, we're fine. We're not, right? So we can talk about liquidity grabs. We can talk about seasonality. We can talk about whatever it is. Put assignments. You got to respect price. You got to respect the technicals. And the bottom line is I no longer have an edge. We had some buy signals I won't get into, but we had some buy signals like the last 2 days that said, well, if this follows through, we're gonna go back up. And I even told you guys very clearly, like the VIX is not going higher this week. After Wednesday, I said I have a sell signal on it. That doesn't mean it's going to crash. It just means it's not going higher. And that was right. I mean, we closed below Wednesday's high. We couldn't take that out. EX futures did finally on Friday, but I was expecting more of a vol crush. We just didn't get one. I also said yields were probably going to double bottom and hold the lows. They did that. I also said the dollar might put in a higher low. I said dollar yen, is starting to look tasty. Didn't take out the lows, but guess what? Stocks didn't get the memo. And my edge is gone, right? My thesis for being in the trade has been invalidated by the reason that I laid out originally. Right? We can't force the market to go back and complete our original thesis. We can't fight that. So just go back to the drawing board and look for what's next, right? I've lost the alpha that I thought I had versus the market. So clearly I'm not in tune currently. So now I need to see what happens next to, now I can be in cash or, be de-risked, and now I can see what happens next and start to put the pieces together from there. And we see what we get Monday. Okay, here's this level, that level. Okay, now we did this. Okay, now we start to see the picture a little bit clearer, right? If you lost that edge, don't cling on to that thesis when it's clearly been invalidated. Don't cling. I mean, like I said, who cares? What if I don't care if we gap and go Monday. I don't care if we gap up to 5,700, which would never happen, but I don't care, right? Is this the last trade I'm ever going to take in my life? Obviously not. I have no plans of retiring anytime soon, right? Like, I'm still going to be fine. I don't care about missing moves. I don't care about selling the last tick. Like, that's amateur mindset. Forget that stuff. It's not serving you. If you're not sure of something, you're ever uncomfortable in a trade, just move out. There's thousands of trades you're going to take in your life. So that's what I would say about that. Don't cling to stuff. And, when something clearly invalidates your level, or your max drawdown, whatever that is, however you trade, just move out. Just move out and move on. So why fight it? If something happens on Monday, something changes, we reclaim a level, what's stopping me from just jumping back on? I could care less. Don't ever fear being that guy that, oh, I sold the last tick. I look like a fool. Like, nobody's watching you, dude. Like, they're watching me. Like, I have my, and I don't even care. So you shouldn't care. So I make bad calls all the time. We had a short, can't remember where it was, but we got stopped out at like the exact high table. It was like one of these days or something. It was like a hedge or something that we put on, and it might have been back here. It got stopped out at like literally like 3 points off the high of the day. Who cares? Like, you think you're going to win on every trade? It's not going to happen. So I have I know what my win rate is. On day trades, it's about 82%. So just move out and I'll win the next, 5, 6, 7 in a row. Like, there's no reason to fear stopping out. In fact, you should actually, sometimes be thankful for it, because that's what's keeping you alive. That's the name of the game. Biggest reason people blow up is they don't stop out, or they think like, well, this level broke, but now we're here, so we got to do that. No, don't do that. Like, you can always jump back on. But if we get a real margin call Monday, I mean, maybe somebody knows something. Maybe something's going to happen with Russia or Iran or something. We gap down and we don't come back till, we don't bounce till the 200. If you're in futures, that's probably not going to be good. And I try to, and going back to position sizing, that's a big thing as well, right? So if you're swinging futures, which I do all the time, I try to explicitly say, like, guys, like, so if we're going to swing this, like, size down by at least 65 to 80%, if not more, on first leg, because you got to prepare for 100 points of volatility if you're swinging, at least. So position size and like options, like, that's a whole different game. I usually don't trade. I trade them. I usually do shares or futures, but position sizing is everything, because, if you're in, half your portfolio and you go down 100 points, yeah, you're panicking, and you're probably going to panic sell where you should be actually buying, right? But if you're only in for 5% or 10%, you have room to DCA, or you're just not panicking at all, and you're just willing to sit through the drawdown because it's not affecting your psyche. So, couple of tips there, I guess. Trying to think if there's anything else. I had some notes here, but yeah, I mean, I guess always just try to have another thing. Like, lastly, I guess just always have a positive mindset. It's going to happen. Like, we had home runs, like massive home runs for like 6 months. I mean, we started the year a little slow. It wasn't bad. It was just kind of like on the slower side. As soon as we hit April, I mean, it was like home run after home run. And I mean, the trade of the year too was the Russell. I mean, we caught this, and we had futures on this, and we even added to them too. It was amazing. There was also plenty of trades where we caught the NASDAQ for 600 points multiple times. Yes, 100 points, 150 points on runners. We even got like AMC on that big gap up. I sold it way too soon. I should have left a runner, but so there was a lot of home runs for months and months. And, it's the cost of doing business. So, if you own, I used to be in the restaurant business before I was doing this, and actually while I was still trading part time. But if you've ever been in the restaurant business, Friday night your fryer breaks at 4 o'clock in the afternoon. You got to call a specialist in, and they need to come in right now, and they're getting paid overtime because it's Friday night. Well, you can't shut down the restaurant. You got 200 covers. You got to pay them. So you got to look at it that way, and again, manage your sizing. Don't get greedy, and it's not going to hurt you. So, and don't ever panic. I have a pinned thing in our Discord, pinned message that just says nothing bad will happen. So it's kind of the motto to go by. So anyway, just wanted to throw a couple of things out there. Thought it'd be a good video to do because whenever we have this kind of volatility, I know it's tough, especially if you're not used to it, or maybe you're a newer trader, and it's a good topic to just touch on. But yeah, just a couple of things there to go over, and hopefully everybody got something out of this video. If not, then well, I'm sorry. But anyways, if you do like it, throw me a like, comment, subscribe to the channel. If you're into day trading or swing trading, come check me out on carnivoretrades.com. And I will see you guys all in the next video. You guys take care.